I believe this is Elon Musk warning us about a huge market crash that is potentially already happening right now. And of course, this is all due to the 16th largest bank in the US failing, the Silicon Valley Bank. The billionaire Bill Ackman says there will be bank runs everywhere on Monday unless the FDIC does a system-wide guarantee, which only has $124.5 billion on its balance sheet and a $100 billion line of credit, which sounds like a lot, but then you compare it to the US banking system, which is more than $22 trillion, that only covers 1.26% of all deposits, and that is deeply disturbing. Here's what this means to us Tesla stock investors, and here is what I am doing. I have been preparing for a market crash for a while now. However, this could turn out to be just an isolated incident. Maybe. We will know on Monday for sure, but if it does not go according to the plan, then expect to see a lot of horrible headlines, panic everywhere, people losing their jobs, people losing their wealth, people losing their minds. Expect that. So you want to remain calm. You want to think through what are you going to do then if it does happen, because right now things are sort of still calm. No one is really panicking yet. Some are, but not that many people. If you had money with Silicon Valley Bank, yeah, you are freaking out right now. But assuming you did not, then probably you don't feel the pain yet. I mean, hopefully this is nothing, but Elon certainly is not thinking this is going to be nothing. Like I mentioned on Friday, I do not want to put any money in a small bank right now. I want to be with one of the top 5 banks right now, just to be safe. Bill Ackman, the billionaire, says from a source I trust, Silicon Valley Bank depositors will get 50% on Monday or Tuesday, and the balance based on realized value over the next 3 to 6 months. If this proves true, I expect there will be bank runs beginning Monday in the morning at a large number of non-systemically important banks, so smaller banks. No company will take even a tiny chance of losing $1 of deposits, as there is no reward for this risk. Absent a system-wide government deposit guarantee, more bank runs begin Monday in the morning. Bill Ackman also posted this post seen by about 10 million people. He's saying the government has about 48 hours to fix a soon-to-be irreversible mistake. I actually read this whole wall of text. It was difficult to read, so for you guys, I converted this post into easy-to-read tweets. By allowing the Silicon Valley Bank to fail without protecting all depositors, the world has woken up to what an uninsured deposit is: an unsecured, illiquid claim on a failed bank. Absent JP Morgan, Citi, or Bank of America acquiring SVB before the open on Monday, a prospect I believe to be unlikely, or the government guaranteeing all of SVB's deposits, the giant-sucking sound you will hear will be the withdrawal of substantially all uninsured deposits from all but the systemically important banks, SIBs. These funds will be transferred to the SIBs, U.S. Treasury money market funds, and short-term treasuries. Treasuries, it just means bonds, so basically you are loaning money to the government. There is already pressure to transfer cash to short-term treasuries and treasury money market accounts due to the substantially higher yields available on risk-free treasuries versus bank deposits. And this is where it starts to get dark. These withdrawals will drain liquidity from community, regional, and other banks and begin the destruction of these important institutions. And it gets complicated here. The increased demand for short-term treasuries will drive short rates lower, complicating the Fed's efforts to raise rates to slow the economy. They would be driven lower because everyone will want bonds then. Everyone. So when everyone is buying, who is selling? then the prices have to go up, which drives the yield down. Already, thousands of the fastest growing, most innovative venture-backed companies in the US will begin to fail to make payroll next week. We actually just processed our payroll, which will go through a few days, I think, after Monday. It's going to be scary for many people. Had the government stepped in on Friday to guarantee SVB's deposits in exchange for penny warrants, which would have wiped out the substantial majority of its equity value. So meaning if you held Silicon Valley Bank stock, it would drop like Nikola stock. But this whole disaster could have been avoided and SVB's 40-year franchise value could have been preserved and transferred to a new owner in exchange for an equity injection. Basically, that person putting a lot of cash in the company to make sure that if anyone wants to withdraw the money, there's enough money to be withdrawn. And interestingly, Bill Ackman is saying that he would have been open to participating, and he has a lot of money too. He's a multi-billionaire. This approach would have minimized the risk of any government losses and created the potential for substantial profits from the rescue. And right here, there's a mic drop moment. Instead, I think it is now unlikely any buyer will emerge to acquire the failed bank. The government's approach has guaranteed that more risk will be concentrated in the systemically important banks at the expense of other banks, which itself creates more systemic risk, says Bill Ackman. Certainly, this event is damaging trust that people have in banks. For those who make the case that depositors be damned, as it would create moral hazard to save them, consider the feasibility of a world where each depositor must do their own credit assessment of the bank they choose to bank with. I am a pretty sophisticated financial analyst, and I find most banks to be a black box despite the thousands of pages of SEC filings available on each bank. SVB senior management made a basic mistake. Very incompetent also. They took a lot of risk. They thought they can predict the interest rates, and they completely failed to do that. They invested short-term deposits in long-term fixed rate assets that you cannot just cash out immediately, basically. Thereafter, short-term rates went up and a bank run ensued. Senior management screwed up and they should lose their jobs. Also, multiple insiders actually sold stock before the bank went under. I think they should be investigated. Right here, look at this. Look at these sales. Look at all these sales. Look at all these sales and all these people. Seems shady to me. The FDIC and OCC also screwed up the government agencies. It is their job to monitor our banking system for risk, and SVB should have been high on their watch list. With more than $200 billion of assets and $170 billion of deposits from business borrowers in effectively the same industry. But here's the thing. You look at this report, the nation's 33 biggest banks have enough capital to withstand a severe economic contraction. A severe economic contraction. Did we have a severe economic contraction? No. And yet, last June, we were told that the nation's 33 largest banks, and SVB, then it failed, was the 16th largest bank in the US. We were told all of these banks are fine. The FDIC's and OCC's failure to do their jobs should not be allowed to cause the destruction of thousands of our nation's highest potential and highest growth businesses, and the resulting losses of tens of thousands of jobs for some of our most talented younger generation, while also permanently impairing our community and regional banks' access to low-cost deposits. And Bill has some more strong criticism right here. This administration is particularly opposed to the concentrations of power. Ironically, its approach to Silicon Valley Bank's failure guarantees duopolistic banking risk concentration in a handful of systemically important banks. My back-of-the-envelope review of Silicon Valley Bank's balance sheet suggests that even in a liquidation, depositors should eventually get back about 98% of their deposits. But eventually is too long when you have payroll to meet next week. So even without assigning any franchise value to SVB, the cost of a government guarantee of SVB deposits would be minimal. On the other hand, the unintended consequences of a government's failure to guarantee SVB deposits are vast and profound and need to be considered and addressed before Monday. Otherwise, watch out, everybody. That was a bit scary. But if you are an investor and if you have income, it might be a huge buying opportunity if this indeed spreads. However, if you don't have more cash and you are invested, for example, I am invested, although I do have high income, I am not going to sell anything because maybe nothing will happen. However, looking at this is not reassuring. Bill Ackman turned 27 million into 2.6 billion during the crisis when the virus started. He went on TV and he scared everyone and he profited from it. So I wouldn't take everything as truth, what he's saying, but it is certainly something to consider. And I won't be selling anything. I will be holding my Tesla stock. And if we do have a buying opportunity, I will take advantage of it. If you can't, well, recessions are not permanent. They do end. And a recession also would mean that all Tesla competitors will suffer a lot more than Tesla, wiping many of them out. So in the long term, actually, it would be great for Tesla. Many people may lose jobs if this is not contained and if it spreads, and I feel very sorry about that. But the reality is, for us investors, this might be a huge opportunity. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.